All right, coming off the markets, let's talk about our Financial 15. This will start our Financial 15 segment. So I'm going to share my screen here with you in a moment. But we're talking about the tax bracket increases. So this Financial 15 segment, if you're just joining us, please hit the subscribe, like, and notification button. But today we're going to talk about some of the changes in the tax brackets. So these are just the tax bracket. There are other changes that come about in 2024 that we'll talk about over the next few weeks. That's retirement plan contribution limits, changes in the IRMA brackets, income-related monthly adjustment amounts. But today we're just talking about tax bracket updates. We're going to talk about why these are important. So I have both tables here, 2023 and 2024. Currently, you can download these tables, 2023, on our website, attleborowealth.com. If you just go to attleborowealth.com, let me just pop that up here if you're just joining us. So that's, I got it the first time, attleborowealth.com. And you can go to the Slott corner, SLOTT corner, and scroll down. And Doug, I see your question. Let me take that question offline. We'll talk about that later. So Doug asks, shouldn't bonds go up if interest rates decline? It just depends on the longevity of the bond, the maturity of the bond, the duration of the bond, the type of bond. There's a lot of it depends in there. So what was I saying? Oh, go to the Slott corner, and you scroll down in there, and you'll see some information about the Ed Slott Group. And at the bottom of the page, you will see these charts that you can download. So let's go back to this here. Okay, so currently we have the 2023 charts up, and by the end of the week, we'll probably have 2024 up. But we want to pay attention to a couple different things, and I'm gonna highlight these a little differently. But let me just give you the breakdown of how to look at this chart. So these over here on the left here on the top section on both of these, again, 2024 to 2023, these are the marginal tax rates. So these are the rates for your ordinary income tax. So whether you earn your money, through your job, whether you have short-term capital gains, whether you have ordinary dividends, everything that's distributions from your IRAs, your traditional IRAs, your traditional retirement plan, anything that's going to flow into the ordinary tax funnel, right? Or we refer to it as a graduated cylinder often in our classes, will end up in these marginal tax rates, and that's just where people get the brackets, right? So let's look at the different brackets. So we start at 10%, and currently we go all the way up to 37%. And we have these different income levels within these brackets. And as soon as you cross over one of these levels, you start entering into the next bracket. So for 2023, the top of the 12% bracket, for example, was $89,450. And for any dollar earned over $89,450, any taxable money earned over that amount would go into the next bracket. Let's just say it was only $1. Well, only $1 of that, if it was actually $89,451 and that $1 crossed over into that 22% bracket, well, only $1 would be taxed at 22%. From $22,000 to $89,450, that would be taxed at 12%. And from $0 to $22,000, that would be taxed at 10%. So it does actually kind of flow in like that's David McKnight's analogy, is that graduated cylinder. If you've got, we use that in science class, we've got this cylinder, and you think about these as your marginal tax rates, right? We get 10, 12, 22, 24, 32, 35, got to add one, 35, and then 37. So as things fill up here, you pay those $0 to $22,000. These are 2023 numbers I'm showing here, as you pay at the 10% bracket. And then anything as it crosses over here, you pay at 12%. And anything as it crosses over the 12% threshold, remember $89,450, you pay 22%. So that's where you get your blended rate, or your effective tax rate. All right, so now that we know how this works, let's look at how to read this chart. Again, I'm using 2023 as an example, but we're going to move into 2024. Trust tax rate. So here you have your individual tax rates. So whether you're married filing jointly here in this middle box, or you're single, this is how your funds are taxed. So again, these are your levels of taxable income and your tax rates. So if you're single, you'll see that you top out at the top of the 24% bracket much, much faster than somebody who's married. It's really cut in half. So your tax rate goes up much faster when you're single because the amount of money that it takes to trigger that tax rate is much lower. I hope that makes sense. In this case, you can see $364,200 compared to $182,100. So they're your individual tax rates. Then you have trust tax rates. So I get a lot of questions when we're doing financial planning about, hey, should I have my funds in trust? It depends on if it's an irrevocable trust or a revocable trust. But trust tax rates are not very favorable because I want you to look at this. Any income that's over $14,450 in a trust is taxed at 37%. Whereas an individual, whether they're married or single, you're either at $693,000 for 2023 or $578,000 for 2023 before you hit that 37% bracket. So trusts, although they have similar marginal tax brackets, not exactly the same, but similar, they're taxed much, much higher, and it's the same with capital gains. We're not going to spend any time on qualified business income deduction. We're going to talk more about these two other items here, standard deductions and capital gains. So these are the long-term capital gains rates or qualified dividend rates. And this is really important. You can either be taxed at 0%, 15%, or 20%. You can pay 0% on your dividends or capital gains, qualified dividends or long-term capital gains. You have to be within these income brackets. And as you go up, just like your marginal rates, it goes from 0 to 15%, and then anything over $553,850 for 2023 or $492,300 for a single filer, then you pay 20%. And then you see these little asterisks, and that is a Medicare surcharge tax. So it goes from 15 or 20% to 18.8% or 23.8%. That's because there's a 3.8% Medicare surcharge. So that's how to look at that chart. Now we're going to compare the numbers side by side. So I'm not going to have us cross over like this. What I did was I clipped these for us, and I took these right out of I just clipped them out of the big chart, and I put them side by side. So now we're looking at the taxable income brackets for 2023 compared to 2024. So obviously 2023 is on the left here and 2024 is on the right. So let's see how they increased. So I just told you that a married filing joint couple from $0 to $22,000, they pay 10% tax. Well, now that's $23,200, that top of that. So obviously an increase of $1,200. And these all come in at about, let's just call it 5.4% increase. Single filers, it's the same. It's a $600 increase here. But you can see, so these are the rates that we're working with now because we're crossing over into 2024. Now, of course, you got to calculate these 2023 rates on your tax return if you're still, for some reason, doing it by hand. But most of the tax planning, and that's why this chart is called tax planning, not tax preparation. But most of these tax charts are used for planning, not calculation, because most people use some kind of program or they have a professional who does it for them, and certainly they have a program. So you can see the 12% bracket for married filing jointly goes up, $4,850 to $94,300. For single filers, it goes from $44,725 to $47,150. Not surprisingly, one half of that increase, $2,425, compared to the married filing jointly. And for the top of the 22%, you're at $190 for 2023, and now at $201,050 for an increase of $10,300. For the top of the 22% bracket for a married filing joint couple. And for a single filer, you go from $95,375 to $100,525. That's $5,150 increase for a single filer. And then the top of the 24% bracket for married filing jointly goes from $364,200 to $383,900 for an increase of $9,850. And for single filers, it's $182,100 goes to $191,950, an increase of $19,700 for married filing joint, and $9,850 for single filers. So that's important. Why is that important? Well, the more you can have more income with less tax, and these brackets here, 22 and 24, certainly here too, but a lot of times, let's just call it any of them. These marginal tax rates are our Roth conversion corridors. So these are the numbers that we use to make the decision about how much we're going to convert from traditional IRA to Roth IRA. So what that means is that we can do, if all things being equal, and we want to take somebody to the top of the 24% bracket, that gives us another $19,700. That's a big deal. So let's just call it $20,000 more that we can convert. And if you've got, $100,000, that saves you 5 years. If we're, how can I say that differently? We can move things faster. Let's put it that way. So at $20,000 a year, we can move an additional $100,000 over a 5-year period. I think that makes more sense. I think I said that better that way. So these escalations help us tremendously when we're converting from traditional IRA to Roth IRA, because if we had included this $19,700 that we now are able to convert up to the top of the 24% bracket in 2024, if we did that in 2023, this $19,700 would be taxed at the 32% bracket. But now it can be included in the 24% bracket because the brackets have expanded. I hope that makes sense.